How's it going, everyone? It's Sam. Tom Lee just gave his thoughts on tariffs and how this affects the market, what stocks are performing well, what aren't performing well, when he thinks this will get cleared up by, if he thinks it's going to be cleared up at all. And hint, hint, he gave you about 5 days. 5 days. He does say that these are pretty much insane, that they're too crazy to actually be what's going to happen. So I want to play the clip for you. If you don't mind, hit subscribe so you can see future videos just like this. If you want to trade crypto, Bitcoin's actually holding up really well at the time of this recording. Maybe it's gone down by the time you see this. But if you do want to trade, there are links to WEEX, BTCC, Blowfin, and BitUniX underneath the video. You can sign up for any of these. You get special perks too, like these trading competitions that just give you free money depending on how much you trade and how profitable you are, depending on how much you deposit as well, 10% deposit bonuses. And you don't have to KYC, so you can set up this account with just an email, a password, check their terms and conditions, and you can start depositing. So check that out, and let's get over to the newest clip from Tom Lee. This was actually filmed this morning, so some things have actually already changed since he filmed it, but let's get to it.
The markets have become risk off, and it's because of Tariff Liberation Day, which was April 2nd, has triggered a lot of concerns for investors because it was worse than expected. It was a 10% base rate for imports with an additional tariff rate for other countries that have large trade deficits with the US. President Trump referred to this as the operation is over and the patient has lived, but the stock market reaction has been very negative. The S&P on Thursday opened with a 3% gap down, and throughout the day, stocks were reeling. One of the reasons...
Also, I don't know if this was just released a few hours ago, but it looks like it was recorded maybe yesterday. Another massive gap down here today. Like the S&P 500 closed down over 5% as well.
Stocks were reeling is that investors were hopeful that these tariff levels would actually be dialed back, but Commerce Secretary Lutnick made multiple media appearances and insisted that President Trump is not going to back off, and that added to selling pressure. Even Peter Navarro did an interview on CBC reiterating that these are not negotiable, and it sent stocks reeling. So overall, the S&P fell 5% on the day after Tariff Liberation Day. That's not what I would have expected, and I don't think a lot of people expected. It was
And then another 6% here today.
A negative surprise. But I want to give you a rundown on our take. First of all, the tariff rates that were shown are absurd. You've heard from many people talk about this. They are very hard to believe because the tariffs levied on China, for instance, is 34% on top of a penalty of 20%. Europe now has a 20% import for all products. Japan, 24%. Korea, 25%. Japan and Korea are allies. Additionally, I'm sure you've heard, but these exhibited tariffs charged to USA rates are not actually tariff calculations, but it looks like it's a measure of the measure of the total deficit to the amount exported. Now, there are plenty of signs that Trump wants a deal. Now, I know I just showed you his lieutenant saying he doesn't want a deal. But keep in mind a couple of things. The implementation date for the higher rate is April 9th. That is a delay, and I think that's intentional. And in fact, Trump himself, and I'll share later, despite what Lutnick says, actually has commented that he believes that he can strike a deal.
Yeah, so he said that yesterday, that if something, I forgot the word, phenomenal, it comes up, then he might be willing to negotiate. So they're looking at April 9, which is next Wednesday, or this coming Wednesday.
He gave an interview on Air Force One Thursday evening after the market closed, and he says, tariffs give us great power to negotiate. Specifically, he says, every country's calling us. That's the beauty of what we do. We put ourselves in the driver's seat. If we'd asked for the countries to do us a favor, they would have said no. Now they're doing anything for us. The tariffs give us great power to negotiate. Now, keep in mind, 6 countries, maybe 7, are really at the heart of this tariff negotiation because they represent the bulk of the dollars. If you look at the dollar amount of goods imported on the left side, okay, and there's a lot of countries listed here. The overall tariff rate, according to Goldman Sachs, is 12.6%, which is actually better than Goldman feared at 15% was their base case. And the reason it's not in the 20s is because there's a lot of products exempted. But I do want to focus on those 6 or 7 that I just mentioned. Collectively, that's about $582 billion that are subject to tariffs, or that are, it's $2.2 trillion. And the overall tariffs raised from these are roughly $582 billion, or 70% of the tariffs. So at the end of the day, these are really the countries to focus on. Interestingly, on Thursday's trading day, these 7 countries outperformed the US. I think it's potentially a sign that they expect some sort of negotiation. And in fact, if you look at it since February, these countries, 7 of 7, outperformed the US, with particular outperformance today, especially for Mexico. At the sector level in the US, the left side shows you the 20 hardest hit industries. And I've just highlighted that many of these that were hit have overseas operations, or they're importers of products. So it's not a surprise they're taking a hit. And the ones on the right are basically defensive groups, and tire and rubber, which not really too familiar with that industry. In terms of granny holdings, there are 4 stocks that I think do have specific exposure to tariffs because either they import products because of where they manufacture, such as Garmin or Eaton Corp, and of course Amazon. But Apple, of course, has overseas manufacturing. So these 4 out of the 33 names are particularly exposed. But again, as I said, it's really a macro issue because every stock became what I'd call no bid today. And so what do we expect these 6 countries to do? Well, they've got 3 options. They can retaliate, they can do nothing, or they can negotiate. Now, retaliation, I think, is not going to be helpful because there are countermeasures in place. So most likely these countries are going to negotiate. And I think I want to take this in bottom order, but Korea and Japan are allies of the US. I think it's going to be easy to come to some terms there. Canada and Mexico have the USMCA, so they're already negotiating with the US. Europe is a question mark because, of course, they're a very large trading partner. And I think China is likely to have some negotiation because there's give and take here. In fact, President Trump, in that same interview, talked about how TikTok is an example. They have a situation where China will probably approve a deal, but they want something exchange on the tariffs. So the tariffs give us great power to negotiate. So you can see there are reasons to expect some negotiations, and I think probabilities favor a negotiation. And if not, then of course there's a greater risk, which is a recession. And JP Morgan puts the odds at 60% of a recession if the tariffs are sustained. But here's the thing. A recession is very expensive. This is all the recessions since 1929. And in general, the fiscal response, which is what the government has to do, matches the decline of the GDP, which means the median fiscal spend is around 2.2% of GDP. So if the US has a recession, Congress has to spend $660 billion to try to, and that's a minimum to try to get the US out of a recession. Well, that would just negate all the benefits of the tariff. In terms of individual stock performance in the past week, the top 5 performers were Tesla, Abbott Labs, Costco, Progressive, and Garmin. And the bottom 5 performers are NVIDIA, PayPal, Eaton Corp, Oracle, and GE Vernova.
Keep in mind, this is before today's trading. So Tesla, I think, Last time I looked, it was down like 8 or 10%.
And in terms of styles and themes, the best performing Granny Shots portfolio is the easing financial conditions, probably because investors are expecting the Fed to actually ease. The second is millennials, led by Tesla. And the third is stocks geared towards a PMI recovery. Now, to give you some background, in case you're wondering what a granny shot is, it refers to an untactical things like style tilt, geared towards them. And I'll speak to you soon.
Okay, so he just goes through what granny shot is. It's basically stocks that he thinks are essentially easy money. Now, again, that shows you how quickly the market's changing. That some of that stuff was already outdated just because he shot it. It sounds like this morning. He shot it this morning. And yet, like I said, it's already a little bit dated. It's just absolutely insane. Now, if we look at VOO today, VOO down another 5.8%. This is the S&P 500. Over the last 5 days, down almost 8%. Over the last month, down 12.2%. From the peak, down 17.4%. This is over about a month and a half. This is a very large correction. And you can see we even were just trending sideways for, 2 weeks? 3 weeks? We trended sideways. And then the last few days, 10% move in literally 2 days. There are some stocks that are just absolutely taking it on the chin. So people are panicking. Tom Lee, I would love to see a video where he goes on CNBC or something like that. Let me just make sure that he hasn't done that. I'm surprised they haven't had him on today. But yeah, I would love to see it. He's usually just buying the dip. He thinks now's a great opportunity for the long term to buy into some of these companies. He's been saying that he thinks we've bottomed, but honestly, that was before the last few days. So yeah, I think he's been a little bit surprised even with how bad this has been. And, he said there that these were worse than we could have expected. It sounds like it's worse than all of Wall Street was expecting. Now Wall Street's pricing in a couple of rate cuts, actually 4 rate cuts this year, a whole % drop. I've been buying very heavy. Let me know if you've been buying heavy down below in the comment section. Thank you so much. Again, if you do want to trade, there are links underneath. I'll see you all in the next one. Bye.